Good morning and welcome to Stock Market Today. It's Friday, May 3rd, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today, brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider hitting your inbox every trading day before the market opens. And I just want to have a special thank you to all of you who take the time to listen here each and every day. So U.S. equities were mostly lower in Thursday's trading. Treasuries were weaker, and the curve continued to flatten. The dollar was higher on the major crosses. We've been talking about dollar strength all week. Gold finished down 1%, and oil was notably weaker. WTI crude down 2.8% on the day. Your outperforming sectors, healthcare, financials, and REITs all finishing higher on the day. They were the only three to do so. Underperformers, energy. We've been bearish on energy. Materials, tech, and comm services. Now, as we get to the desk this morning, S&P 500 futures are up 30 basis points in front of today's non-farm payroll report, which is expected to see an increase of 185,000 jobs in April. The unemployment rate is seen holding at about the 3.8% level. Asian markets were mixed overnight, though we will note that China and Japan are both still closed for a holiday. European markets are higher. Treasuries extending their post-FOMC move lower. Crude slightly higher after the nearly 3% sell-off yesterday. And as we dive into the S&P 500, some interesting action yesterday. And the reason I say that is we've been talking about this resistance zone, this level around 2940. Market was kind of stalling out there. Big reversal lower on Wednesday. And then yesterday we started to test this support zone that we've been highlighting, 2890 to 2910. You can see the long tail here just below the 2900 level for the S&P 500. Still see that as a support zone. Want to see the market hold that level. We are trading higher here this morning, but we'll see what happens post the non-farm payroll report. Below 2890, 2910, stronger support in the 2850 zone. That's this gap higher on April 1st. Resistance still remains in play at the 2940 level. We've drawn the line. You can see it. It's the highs from September. We tried to push through and reverse. Ultimately, I think we are going to take out that level in a convincing way, but I do think that we have to work off these overbought conditions a bit. RSI is still holding bullish ranges, and what we want to see is similar to the pullbacks other times within this uptrend. We want to see the RSI hold above the 40 level, ideally 50, the way it did back here in March and then again in late March. We'd love to see it hold 50, but 40 is kind of the line in the sand to delineate bullish ranges for the RSI, so we want to see that level hold. That would give us confidence that the trend is still intact, momentum is still behind it, and we can start to get aggressive on the long side of the portfolio. Add to that the fact that Chaikin money flow is bullish. Our indicators are lining up with the market trend, seeing a bit of confirmation. Really, I think what's happened here over the past week is that we're just working off these overbought conditions. Let's dive right in now. Your market in a minute. What am I talking about? My note today. Stocks fade, but close off the worst levels of the day. We looked at that. All eyes will be on today's non-farms payroll report. Again, looking for a gain of about 185,000 jobs in April. Copper to gold ratio confirms a slowing but not contracting global economy. I look at this ratio, copper relative to gold, and when copper's outperforming, that's a sign of economic strength. And when gold's outperforming, it's a sign of maybe a little economic slowdown. We are in a downtrend. We'll take a look at that chart a little bit later in the show. Semiconductors, you know I watch this one religiously. Semiconductors are trying to reverse higher on a relative basis. A breakout through those resistance levels, we talked about it last week, we'll talk about it again today. Breakout through those resistance levels would be bullish for equities. Futures do point to a higher open today. Let's dig in on the power bars now. Now remember, the power bars look at each of these indices and tell us how many stocks have a bullish or very bullish rating, how many are neutral, and how many are bearish or very bearish within the Chaikin Analytics model. Obviously, we want that ratio skewed to the bullish side. And it is mainly for these major markets. Dow, 8 to 4. That has contracted a little bit this week. S&P 500, 148 bulls, 68 bears. NASDAQ, underperformer yesterday relative to the S&Ps. 25 bulls, 10 bears. Small cap stocks buck the trend, move higher. 551 bulls, 310 bears. That is a little bit of a change of character from what we've seen. Small caps have been underperforming. If you read my note today, for those of you who receive it, we'll talk about how they are kind of holding support on a relative basis with a slight positive divergence there. Bonds down tick, sending yields higher according to the Chaikin Power Bar. large cap stocks and small cap stocks are bullish. Taking a look at our stock of the day today. Remember, this stock is auto-generated by our algorithm, and then I provide my analysis for you in real time. Park Hotels and Resorts real estate stock closed at 32.54 yesterday, up 56 basis points. So some nice outperformance yesterday. Power gauge rating is very bullish due to very attractive financial metrics, very positive expert activity, strong price volume activity. 5 factors in each of these 4 categories make up our 20-factor model that kicks out this very bullish power gauge rating. Very bullish stock, strong trend, strong industry group, type of name we want to consider owning. Do we just go out and buy it? Absolutely not. We walk through the analysis. Interesting to me here is we're starting to see a bit of a personality change. Been on this bullish rating since February, but relative strength has been fluctuating between underperformance and outperformance, now kicking back into outperformance ever so slightly. Chaikin money flow bullish, above a rising long-term trend line. Do have a little bit of a resistance zone to contend with here in the 33-34 area, combined with the fact that the stock is near-term overbought based on our overbought, oversold indicator. So what do we want to see here? We want to see maybe a bit of a sideways action to a consolidation that holds above $31, works off this overbought condition, gets closer to an oversold condition, all else being equal, i.e. still bullish or very bullish and still outperforming, then it's a much more compelling entry point on the long side. I'm adding PK to a bullish watch list here today. I would do the same if you're following along with the show. I don't like the setup here and now because of that overbought condition, but I do want to add it to a bullish watch list. When that overbought condition is alleviated, we'll take a look at it on the bullish side of the portfolio. Sector tracker. Major movements of the major sectors of over the last 5 days. Healthcare continues to rebound and move higher. Coming out about a week and a half ago, deeply oversold, coming out of those conditions. For those of you who read my Tuesday market survival guide, last week, we were highlighting counter trend trades in healthcare. Those have largely played out. Financials doing well. We're actually featuring financials in our note today to Chaikin Analytics clients. Real estate holding up after testing and holding support. Staples and industrials round out the groups of stocks that are higher over the past 5 days. Utilities, materials, discretionary, kind of middle of the road. Energy continues to underperform. The relative and absolute trends in energy continue to be bearish. We've been highlighting for the past few weeks in our market survival guide, the once weekly note that comes out on Tuesdays, bearish trades in energy, and those have been our best performing trades to the bearish side of the portfolio. Energy continues to look weak. Communications, a lot of weakness there having to do with Google selling off following their earnings. Tech, I want to see tech getting gear here. I don't like seeing tech as an underperformer. It's 20% weight in the S&P 500. We want to see tech doing well for the market to do well. Underperforming over the last 5 days. Let's keep an eye on it, see if we can reverse higher. Speaking of tech, though, within tech, one of the groups that we do like, we have been bullish and remain bullish, software and services. Over the past 6 months, software and services has outperformed the S&P 500 by 15.1%. And that power bar ratio, which measures future potential, is very strong. 55 bullish or very bullish stocks, 10 bearish or very bearish stocks. Currently ranked number 6 of the 21 subsectors that we track based on this ratio. Has moved down 1 slot over the past week. Some indicative stocks there to consider. Do your analysis, though. Don't just buy these 3 stocks. Do your analysis. Progress Software, PRGS. Verint Systems, VRNT. DXC Technology, DXC, all have very bullish Chaikin power gauge ratings. Let's look at Verint here today because I think the pullback sets up an opportunity. Very bullish stock, strong trend, strong industry group. Type of name we want to consider. Market and model are in agreement. Ribbon here tells us that the power gauge rating is bullish and has been bullish or very bullish since January, and the stock's been outperforming the market since that time frame. Now, deeply oversold, while Chaikin money flow remains bullish and has been persistently bullish since January. Above a rising long-term trend line and holding above this earnings-induced gap. A little bit of a bull flag here for you pattern traders. Oversold condition. I like the setup here in Verint. VRNT on the long side of the portfolio makes sense if you have room to add some software exposure to your portfolio here today. Let's take advantage of this oversold condition here in the near term. Ticker symbol is VRNT. Let's look at yesterday's S&P 500 gainers and losers, our movers and shakers. Teleflex up 6.2% following their earnings announcement. AMD rebounding from the previous day's sell-off, up 5.5%. The sell-off was only about 3%, so rebound and then some. ABC, AmerisourceBergen Drug Distribution Company, up 5%. BMC, Vulcan Materials, their earnings sent that stock higher by 4.4%. And CNC bucks the trend of weakness in the providers group, moves higher by nearly 4%, 3.8% on the day. FLR lowered their guidance. Investors take 24% out of the stock. Cognizant, a rare miss and cautious commentary, sent that stock lower by 7.7%. I was looking this morning. I don't know if this is the final number, but I saw 7 downgrades from the sell side here this morning. Huntington Ingalls down nearly 7% following their earnings announcement. Dow DuPont down 6.73% on earnings, and Dow goes along for the ride, 6.1% following their earnings. Another busy night of earnings last night. There's Vulcan. We talked about it. VMC beat by 13 cents. Activision, ATVI, beats by 7 cents. Fortinet, FTNT, another one of those strong software stocks, beat by 7 cents. Dow DuPont beat by 14 cents, stock trading lower. EOG beat by 16 cents. Didn't matter. Energy names remain under pressure. Before the open this morning, bullish Dentsply, ticker symbol XRAY. Reported earnings, stock trading higher 6%. AMT, SIBO, Dish, neutral stocks reporting before the open this morning. After the close tonight, we will hear from Berkshire Hathaway, and Berkshire made some news last night saying that they are starting to buy Amazon. Amazon trading higher in the pre-market. Bearish Newell reports before the open here today. Let's dig in now. I'm asking the question, are semis set for another test of the highs? We certainly hope as bulls for a test and breakout of the highs. Here's the ratio chart that you know so well. I feature it often because I believe it's that important. SMH relative to the S&P 500, knocking on the door of these highs. Now it faded following the Intel print and Texas Instrument print, and now it's beginning to move higher. What's interesting to me is that the indicator here, the RSI, didn't go below 50 on this pullback. That is bullish for the ratio and therefore bullish for the market. Series of higher lows for the RSI, and it holds in bullish ranges after working off this overbought condition. This sets the stage for another test of these highs, and a breakout through those highs and a continuation of the trend up would be bullish for the equity market. Ratio is above the rising 200-day moving average, and you can see we've talked about it a lot. This ratio tends to lead the market at tops and at bottom. So for equity bulls, we do not want this to be a top that leads a top in the equity market. Copper gold ratio to test the lows, we don't know, but it looks like it might. Ratio of copper to gold speaks to economic strength. A lot of the economic numbers that we've been seeing, both in the US and globally, point to a slowing but not contracting environment. And this ratio kind of confirms that. Copper been in a downtrend relative to gold. Counter trend rally here through the 200-day moving average fades, leaves a negative divergence on the chart. Notice that this high produced a much lower RSI high relative to this high. Now back below the 200-day moving average, RSI looks like it wants to work its way back towards the bearish ranges, setting up a potential retest of these lows down here. That speaks to what we're seeing in the economy globally. Slowdown, not contraction, in line with our thesis. In that environment, we want to favor secular growth stocks, especially the large caps. And finally, I'm asking, are we going to get a Buffett-induced FAANG breakout? Warren Buffett saying that he has been buying Amazon. Amazon, obviously, one of the FAANG stocks, Facebook, Amazon, Apple, Netflix, and Google. This index that I built was rebuffed, turned away at the 2018 highs, remains above the 200-day moving average. Looking for a relative breakout at, well, this is FAANG versus the S&P 500, not quite there yet. But what I see is us working off this overbought condition RSI remains in bullish ranges. I think ultimately the FAANG stocks are going to break to the upside, indicating that the market's generals are in gear with the bullish trend. That's it for today. Sign up for the email. I will see you back here on Monday. Have a great weekend, everyone.